What are you expecting? Is this, and how's that going to drive any potential decision making by the Fed next week?
Well, I think the Fed's decision, we've hinted at least, is made. I don't know what's going to happen the next week to change their mind. There clearly is a global economic slowdown. My concern is the ECB says they may lower rates. I'm not sure if lower rates were the answer, the European economic environment would be going gangbusters. Lower rates there have actually worked negatively. Their financial sector's in the doldrums, and I really wish they'd find another strategy other than lower rates. I think the Fed's going to follow almost because they have to, where our rates are significantly higher than other central banks, and the global economic slowdown may eventually trickle over here and impact our relatively strong economy.
Mark, it's Jackie DeAngelis. If we get a gangbuster GDP number for the second quarter, like we saw for the first quarter, do you expect the Fed to back off in any way, or do you think its hands are tied in the sense that it's told investors that it's going to give them the cut that they're looking for, and that's part of the reason the markets rallied?
Well, all this back and forth, if we do get a very, very strong GDP number and the Fed pauses on rate hikes, all the news we've heard in the past week and this recent market sentiment that's pushed stocks higher begins to fall back. And we can't really have a day-by-day or even a week-by-week Fed watch and stock market reaction. Investors want some clarity. I'm hoping that the numbers come in line. The Fed makes one cut and pauses from here and let this relatively strong U.S. economy do the trick in terms of continuing reasonable economic growth, and we stop looking day to day at what the Fed's going to do.
Yeah, and you see in that, Mark, that University of Michigan consumer data looks like pretty confident consumers. They're spending. They, too, I guess, like the investment pros, are expecting lower rates. But given the confidence, the strength of the consumer, is that another argument to say this economy is not really in need of a rate cut?
Well, whether the economy, I don't agree that the economy is in need of a rate cut. The Fed has signaled that they will. Look, you have rising wages, the best in decades, over 3% year over year. You have historically low unemployment. You've got low oil prices, which helps the working people in the middle of this country. And you have low interest rates where people are now able to refinance and put money in their pocket. Those are four very powerful factors that say the consumer is strong. And, look at trying to hire somebody. The labor market is so tight, you have to pay up for new talent. So there is unbelievable strength underlying the U.S. economy in so many areas. It's a little astounding or surprising that the Fed's going to cut, but that's what they signaled. That's what the market is reacting to.
And it sticks it to savers, people who are trying to do the right thing. It hurts them, and they're still angry about what happened after 2008. Mark, good to see you. Thank you so much.
Good to be here.
Mark Avalon.